let's talk about flips. Flips meaning buying a property and selling it on, effectively trading. Can you just expand a little bit more on that from somebody watching this? How do I structure myself that way then?
Yeah, I mean, the reason why it's important is if you're a property investor, you're going to normally, property investors will build their portfolio, high gearing, but they'll look to generate income as well.
Yeah.
And they look to generate that from property. So flips is a natural course where they come across a deal and they know that they can turn it on and sell it to somebody else fairly quickly, whether it's another investor or not, and make a profit.
Yeah.
Flips are, as you indicated, a trade. So if it's an individual doing flips, they're going to be liable to income tax on the profits.
Right, okay.
If they're going to keep doing flips, and they're going to do a number of flips, there's an argument to say that if they're producing enough income from that they don't need it all, there's an argument to say that a limited company might be a better route forward.
Okay.
So it very much depends on the individual. Again, the advantage of a limited company is that the first 300,000 is taxed at a lower rate. Yeah. So you've got a £300,000 band of profit. You can offset expenditure against your profits. Yeah. The tax rates are going up over the next few years. They go up to about 23% on the 300,000 band. Whereas if you think at sort of income tax rates are about 38,000 or so, and you're going to be paying tax at 40%. So in simple terms, as you said there, people are leveraging off the banks, high gearing, maybe not drawing income from their property portfolio, but looking at capital growth. They're wanting to create income somewhere else. One option is to do it in their own name, but if they're doing a lot of those, they may want to think about moving that across into a limited company. So we're talking about capital gain, we're talking about income and trading.
Yeah, so capital gains are investment properties. It's not on trading. A capital gain is where you've had a property, you've intended to keep it for some length of time, and then eventually you sell it and you get a capital gain on it. So come April, it's going to be good news if the rules stay as they are intended, that you will only pay 18% tax.
Okay, so in a situation like that then, somebody, as you're saying, it may point them towards acting as a sole trader. Yeah. Buying it as a buy-to-let, getting an 85%, even a 90% these days, buy-to-let mortgage, holding it, renting it out, cash flow neutral, positive, however their structure is, and then selling it further down the line, 18% capital.
It may be that you actually own it as a partnership with your wife, or in partnership with your children, or in partnership with a business partner, but keeping it as a non-limited item is probably a good way to go these days. Okay. Whereas a few years ago we were suggesting that people perhaps put their buy-to-lets into a limited company. Right.